There it is, the sound of the closing bell at the New York Stock Exchange, and it was a strong day for the markets. The Dow Jones ended the day in the green, closing up around 600 points.
And the gains carried over to the other indexes as well. The S&P 500 jumped more than 2%. The Nasdaq is up somewhere around 3%. Let's bring in Tamar Essner for more on all of this. She's the principal at Vectis Energy Partners. Tamar, thanks so much for joining us today. I want to start out just with a sort of broad overview. Big day, especially for the Dow Jones. What is driving the market today?
Well, I think that the market is really sort of hopeful that there'll be a ceasefire between Russia and the Ukraine. Obviously, everyone wants that. I don't know if that will happen, but I think that that's a big driver of the optimism, and certainly that's been a driver in terms of pushing oil prices down over the past two sessions.
Everyone's talking about the high gas prices. While they remain high, the cost of oil has tumbled in recent days. Just today, prices fell under $100 a barrel. What's causing this moderation in pricing, and how long can we expect it to last?
We think the moderation will be temporary. I mean, over the last 2 days, essentially, oil has reversed all of the gains that it made since Russia invaded Ukraine and towards the end of February. We don't view that as sustainable. I think the market really got spooked today, the oil market that is, and yesterday regarding the unexpected lockdowns in China. I think the market thought we were out of the woods with regard to COVID, and now there's potential expansion for those lockdowns in China, which could potentially have real demand destruction in China, again, on a temporary basis. But the oil market is very sensitive to China. Essentially, if China sneezes, oil will catch the flu. And so I think that that's really been the driver. But insofar as the conflict in Ukraine remains uncertain, we don't think that prices can sustain below $100 a barrel because there's just too much uncertainty with regard to Russian barrels. At the same time, demand has been pretty sticky. So there really is a supply gap that should continue to support prices over time.
You may have already given us part of the answer to the next question, but it's what I keep hearing from people over and over. We've seen, especially over the last couple of days, the price drop per barrel, but yet you go to the gas pump and you don't see the price of gasoline falling. Can you give us some insight into the disparity there?
Well, prices at the pump have a hard time going down. It always seems that they're have an easier time going up, and there is a little bit of that lag. And so we expect that, particularly when it comes to diesel. I mean, there actually are real shortages of diesel, a little bit less so in gasoline. I expect that there'll be a couple of days worth of lag until you start seeing today's crude oil prices being reflected at the pump. So I think that prices will moderate. But the question is how long? I mean, if this is just a short-term movement, which we think that it is in terms of crude oil prices, then we might not see that much relief at the pump unless something happens from the administration or from another actor to alleviate prices.
Never feels like the lag is so noticeable when prices are going up, however. Tamar Essner, thank you so much for joining us.
Thanks for having me.